Good morning. It's a beautiful day here in Miami. It's 11:03 a.m. and we are coming to the close of what was an incredible week in the stock market. As many of you know, I am an avid investor and have had some great years recently in the stock market. 3 years ago, I had 125% returns in the market for the year. Last year was negative 22%, and or 2 years ago. And then last year, I was up 235%. And I looked this morning, and from February 1st of 2020 to January 29th of 2021, my portfolio is actually up 359%. Pretty good numbers, got me back in the game. And so far this year, even though the stock market is down by 1%, coming off of a crazy, a crazy week that I've never seen before, including when I worked at Merrill Lynch, we see that I'm still up 29%. And the reason I'm up is not because of the fact that I'm good at guessing. It's really because I do extensive research. And the research that I do, really, I look at the trends that are taking place at a global level. And then within the trends, I isolate companies that are trying to make their way and profit from those particular trends. And I've been very good at, I usually spend 2 to 3 hours every day simply reading and looking for my next pick. And even though NEO has done great for me in the last year, I mean, I owned it all the way down to $1.19 a share, and now it's all the way up to, well, it closed at 57. But I've never seen anything in my career, and I've been investing a long time, that happened with Gamestop. Gamestop, AMC, Bed Bath & Beyond, Naked Wardrobe, and a couple other ones, Tootsie Roll. It was fascinating what happened. One of my friends bought in. He bought in at GameStop at 113, and he sold it at 480. And so in 2 days, he made 300 and whatever that is, $67 a share, which is fantastic. But he's very good at picking stocks, and he knew when to get in, when to get out. But what we really witnessed was something that was intensely important for our society, because what we saw was not really had anything to do with the stock market itself. It actually had to do with the confluence of forces that are being dramatized right before our very eyes. As a matter of fact, what we're watching in the stock market is indicative of what the future is going to look like. And I'm going to sit down and explain critically what is exactly going on. And it ties together divergent topics. For example, it ties together social environment, and it takes a look at institutional forces, technological forces, demographic shifts, things of that nature. Then we're going to take a look at its impact on human behavior. What are the fundamentals of human behavior, right? What is human nature? Are we fundamentally competitive? Are we fundamentally cooperative? Or are we both? Are we lemmings? Do we just follow? Do we lead? I mean, these are important questions. And I think right now we live in a period where critical thinking is kind of falling to the wayside, where following the pack is coming to the forefront, which is good. It's bad. There's really no opinion on it. It's just a fact of what's taking place. And then I'm actually going to talk about some of the explosions in suicide rates. As you know, lethal violence is my thing, and talking about the explosion of GameStop and its relationship to suicide almost seems farcical. However, it is very dramatic, because the forces are the same. The forces that underlie what happened with GameStop are the same forces that underlie this dramatic shift in suicide. And then I'm going to talk a little bit about a shift that I'm taking on my YouTube page. I'm going to shift away from a little bit from Hope Works with Schwaner. That's going to stay. However, what I'm going to do is I'm going to shift my focus into investing. And I'm going to teach people how to invest, but I'm going to teach them how to invest by looking at it from a sociological lens. Because I've done really well in the stock market, not because of, like I said, not because of luck. It's because I'm always looking at what are the sociological trends that are taking place, and how do I find the best company within its industry to capitalize on those trends. And therefore, when you find them, they're hard to find, right? But when you find them, you tend to do really well. And GameStop, I'm very familiar with GameStop because I have a 21-year-old daughter and another 15-year-old daughter. And my 15-year-old, she, well, both of them, they both are have their own YouTube pages, and they're blowing up. My 15-year-old, she has a video that hit 50,000 views in 2 days, and her subscription level is growing crazy. And so is my other daughter, my 21-year-old. And you know, through their whole life, because they're Pokemon fans, I've been buying Pokemon games at Gamestop since 2003. So I'm very familiar with Gamestop, and I'm very familiar, and thankfully they have used games because like Animal Crossing and things. I don't mind buying brand new games, but $69? Are you serious? $69 for a new Pokemon game when I can get a used one? I'm not trying to cheat my daughters. However, I'm very familiar with. We bought the Wii U there. We bought the Xbox there. We bought the what do you call it? The 3D, whatever that thing is called. We bought the Switch there. So we've been buying it, and I've always liked GameStop. However, as far as it being worth $480 a share, there's no way. And sadly, even though it has shown a lot of promise, it was a $5 stock last week. All right, and its fundamentals. The reason it's $5 is because fundamentally that's where it should be. It's a penny stock that caught momentum because of the Reddit and what's it called, the Invest We Bets or whatever it's called. But the Reddit profile on social media pushed this thing up because what you had was a collective conscience using the functionalist theory, where people share a collective way of thinking about, or regulation or integration into society and culture, and that collective conscious pulled or pushed that game up. And then they found a couple other things, and we're going to talk about the backdrop to that so that we can really fundamentally understand. But for everybody who caught it at 100 and it went up to 480, there's going to be a whole lot of people who bought it at 300 and it's going to go all the way back down, because without the fundamentals, eventually what's going to happen, and it happens all the time. Are you kidding? If you go back, see, I'm fortunate enough that now that I'm older, I've got to watch the market go up and crash, go up and crash, go up and crash. It crashed in '87. My roommate lost $14,000 in like 20 minutes in the crash of '87, and he was like, yeah, whatever. And I was like, $14,000, I'd have paid my tuition for the year. And I'm like, well, it was big to me. Then, of course, there's a dot-com crash in the year 2000. Then there was a crash in 2008. And what's his name? Taleb. His last name was Taleb, I think. And he talked about the black swan, that nobody could predict that it was coming in 2008. And that was incorrect, because I had already predicted it because I was looking at some structural forces. When I worked at Merrill Lynch, I noticed that Merrill Lynch had a mutual fund company, BlackRock, that they used to buy shares of companies, and they had this mutual fund, and then they also had a research arm, and the research arm, I was into Agilent technology at the time, symbol A, and I was reading up on Agilent using the research report that said it was a strong sell, but BlackRock was saying it was a strong buy, and I'm like, how is it possible for one company to say two different things about one stock? What does that say? It says it's pushing it up and pushing it down at the same time. So if I'm a retail investor, I don't know exactly what to believe. Do I believe BlackRock or do I believe Merrill Lynch, when they're both the same company? And then I started asking my partner, whose name is Joe, he was a fantastic broker dealer. I said, Joe, don't you think it's kind of suspicious and kind of funny that Merrill Lynch is into mortgages? Why are they into mortgages? I said, there's something behind, because we're doing broker dealer. We're selling shares. We're investing in mutual funds for our clients. Why mortgages? And we had 9 different areas that we were dealing in. I said, doesn't seem right to me. I said, I'm going to leave this company because I don't like this report. I don't like that there's something fishy going on that I can't get to. Well, as it turned out, they were what they call creating collateralized mortgage obligations, where they were taking loans, instead of it just being yours, they were monetizing them by putting them all together as one lump, so you couldn't get out of it, or you couldn't refinance it, or you could refinance it, but you couldn't move late payments to the back. You had an economic crisis, people were losing their jobs, and then all of a sudden the thing came crashing down. There was no accident there, right? There was no accident that 2008 happened. And in 2000, we had the same kind of situation. It was different, the dot-com. None of these companies had any earnings, right? So we were artificially just blowing up the stock market, but it wasn't built on any fundamentals. And so when the fundamentals collapsed, the whole market came crashing down, and it was a vicious crash. I mean, it was, for those of you who weren't born yet in the year 2000 or were very young at that time, the market crash of 2000 devastated people. The suicide rate exploded because people lost everything they had. And now we're in a similar situation, right? Because we have technology where people can watch YouTube and they can watch these videos on what to invest in. The problem is that every time I watch one of these, they're very good. Some of them are exceptional. But if you don't have the background to make your own decisions, you're vulnerable. And people are going to be so vulnerable when GameStop comes crashing down. There's ways to make money off of it, but I'm not going to explain that. This is not an investment class. However, what we're really looking at is the same kind of thing that happened then. So if we have artificially inflated companies that don't have any earnings, they're not making any kind of profits, then they're being artificially held up based upon speculation, based upon guesswork, based upon following videos without any kind of critical thinking as to why these companies are going up, and that makes us vulnerable. So really what I'm moving towards is we need to have a sense of critical thinking about what's in front of us. And for your generation, it's really important to take a look what's in front of us for the simple fact that, you know, the future is changing right before our very eyes. And your ability to predict where the institutions are going to go, where technology is going to be a life-saving device for you moving forward, right? So if we take a look at what is ahead of us, it is really important to be able to do your research, really be able to take a look at systems, really be able to take a look at patterns of behavior and understand it. So we see the history of the collapse in 29, the Great Depression, in 2000, 2008, I mentioned 1987, and 2020, last year, because of COVID, right? Crashes are pretty normal. They happen, right? But people tend to invest off of following others. Why? Because we're social. We buy as it's going up because we feel good. We think we're making money. We sell as it's going down, which is the exact opposite of what you should be doing. It's called odd lots theory. In other words, people invest, they buy off of euphoria, and they sell off of fear rather than having a strategy that they use to capitalize on it going in either direction, right? Why is that? Why did GameStop happen, right? So let's take a look at it like this. There were economic forces at play that led to the GameStop situation. We'll talk about that in a second. There are political forces at play that led to the GameStop situation. There are shifts in education. There are shifts in the way in which work is done, right? Work is being done from home now because of the pandemic. Then, of course, you have the pandemic, which is, I guess it's kind of a health institution, right? Then you have a massive shift in technology, right? 25 years ago, there would have been no way to communicate across millions of people that we're all going to buy into GameStop and push up the price. It was impossible. But with social media, now we have the ability to communicate with millions upon millions of people simultaneously, or very close to simultaneously, so that we can all collectively act in a way that is being pushed or that's being proffered. So therefore, technology and social media has a big impact, right? And then, of course, the demographic shift. From what I understand, much of this was driven by the millennial generation, which is very savvy with technology, which is very savvy with using those communicative formats to launch what to me I would call as a social movement. But it's even more than that. So if we take a look at this from a broader perspective, right? Let's take a look at, and let me just briefly explain a couple theories, right? There's three major paradigms in sociology, which I'm a sociologist. There is the functionalist paradigm, right, led by Emile Durkheim. Let's see here. Let me see if I can type that in here. Functionalism, and that's Emile Durkheim. Yeah. And then there's conflict theory, which is Karl Marx. And then we have the third branch, which is symbolic interactionism. And you should look all these up, make sure I'm correct. I am correct, I think. Symbolic interactionism with George Herbert Mead. Right? So we take a look at these, and these will give us a conceptual background to understand what took place. So let's start with, in this case, the economic component of it. And I'm going to kind of just describe real quickly each theory, and then how they apply to the economic institution, political institution, etc. Right now, I see a lot of all the theories at play. Conflict theory basically is a theory that says there is a competition between the haves and the have-nots, the bourgeoisie and the proletariat, the top 1%ers in more common vernacular, and the rest of us, right? And according to Marx, the bourgeoisie are the persons who own and control the means of production, that is the economic order, and the mode of what's it called? The mode of production and the mode of communication, right? In other words, if they control how information is disseminated, they control the way in which people think and what information they have to make their decisions. And if they control the mode of production, they control the economic institution, which dictates how you work, how you get paid, the direction that labor is going to continue to follow, profitability, exploitation, alienation, right? Because basically what Marx is saying is that when you work for somebody else, they're always going to pay you less than your value. And when people become detached from their work and they become detached from society, then they will ultimately become detached from themselves, and they become detached from nature. And when this happens, what you see is hopelessness. And this hopelessness is based upon social class inequality. And a lot of the things that we were seeing in the last, and not just social class inequality, racial inequality, gender inequality, these inequalities are based upon who has power to define and who is defined. And based upon these type of things, what we're seeing is a class, gender, sexual preference warfare, right, between those who have control, those who are trying to find control or at least regain control of their lives. And what's happening is that we're seeing this alienation coming to the forefront. Now keep that in the back of your mind, right? So because when we take a look at GameStop, really what's underneath the surface is that as an investor, I'll just keep this real quick, is most of us know that if we buy a company, we want it to go up, right? Very simple. Well, there's groups of people who can also make money if the stock goes down. And there's ways to do it, but the one that's come to the forefront, the one that's come to the forefront is what is called short selling. All right? And short selling essentially is that I can borrow shares, and if it goes down, I can buy the shares later, and I can get the difference in the price. Okay? So short sellers want the market to go down. Well, there's some very, very powerful hedge funds out there, and those hedge funds have the ability to utilize research reports to say that X, Y, and Z company is going to go down. And then what happens when they file that report, typically it goes down, or they'll give a price estimate. We're going to give a price estimate, or they'll give a buy or sell recommendation. We're going to say a sell recommendation on this company with a price, it's sitting now at 50. We think it's going to go down to 35. Then all of a sudden what happens? As soon as that report is released by Goldman Sachs or JP Morgan or whomever, Deutsche Bank, the stock typically goes down. But if they give a positive report, it typically goes up. Now, here's the question. In human nature, are people trying to profit? Are they trying to get ahead? Are they trying to make their lives for their families better or make them worse? So do you not think that perhaps some of these people have networks, social networks to others who are wealthy, where they're going to profit as well? I mean, this is why Martha Stewart went to prison, isn't it? Is because she got information that us regular everyday people couldn't get, all right? And then because it was illegal, because she got it through insider trading, it ended up that she went to prison for it. But that doesn't typically happen very often. However, this is what happens. People talk to people, and this is what's going down, baby. This is what's going down. Yeah, have you ever gone to McDonald's and got a hookup from your friend? You ever go to a place where, they give you a little bit of extra food and you don't have to pay for it, and they wink at you or whatever? Or, things like that. It's the same type of deal, except it's on a bigger scale. So the hedge funds have a lot of power in the markets, and they can make it go up, they can make it go down without, quote unquote, manipulating. Otherwise, they go to prison, right? So here's what happened. You get a band of people who are tired of losing because the hedge funds and the major mutual fund companies and institutional investors, they're tired that they get to make all the profits while I have to sit here and battle for crumbs. As a matter of fact, if you take a look at the stock market going back to the crash of 1929, here's what you'd find. The average return for the market has been 11%, right? But the average return for investors, the individual investor, has been 1.5%, right? So how is it possible that the individual investor gets a 1.5% return when the market's averaging 11? It's because the institutions have a lot more power than you as an individual. Individuals buy and sell off of emotion, right? They follow others. When everyone else is getting scared, they sell. The institutions find the bargains and they buy. When it's going up, 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 and we're following people saying, oh yeah, GameStop is going to go all the way to 1,000. I'm jumping in, and then the other ones, the institutional investors are saying, oh no, I'm going to bet it's going to go down, and now they go ahead and buy this stuff for it to go down a put or whatever, or they short it, and it goes down and they make a fortune, right? Well, the individual retail investors really got tired of it, so they band together and they found some companies such as GameStop that had huge short positions. In other words, the companies had lent out and borrowed all these shares for it to go down. Well, what they did was is they came together and said, you know what, on Reddit, 1 million people are following, and they said, you know what we're going to do? Let's buy it. And let's squeeze those people. So you got the alienated population trying to take it to the wealthy population, the bourgeoisie. And in taking it to them, what do? They push the price up. Now, when you short a stock, if it starts to go up, because it's called margins, if your margin isn't met, then you got to go ahead and you got to buy the stock at a higher price. But because you bought it at a higher price, it pushes the stock price up higher. And then you got to buy it again and then again, and it just keeps pushing it up almost infinitum. In other words, what it's called a short squeeze. And as an investor who likes to watch it go up, I love a short squeeze because that's going to push my value up, and I can sell my profits later if I want to, right? And one of my companies, you know, it consolidates and then it goes up because of short squeezing, right? It's a battle, and I'm used to the battle, but I've taken emotion out of investing, right? But what you saw with GameStop really was a conflict analysis, man. You had social class conflict underlying the decision making to push the stock market higher, all right? Now, the other things that are taking place, let's look at it from a functionalist perspective for just a second. A functionalist perspective is basically saying society seeks stability, right? Society is trying to promote stability by making homeostasis, or stability with the institutions. So if the institutions fall out of line, they're going to adapt so that they can come back to the status quo, right? We like for things to function well. We like for people to conform to the norms. We like for them to conform to the institutions, right? Because the more people conform, the more they're part of a division of labor, that is, breakdown of the labor market, the more integrated they are into the labor market, and the more that they share a common way of thinking, integration, right? So you have a cultural component of integration, then you have an economic component of regulation. If people are regulated and integrated well, society is going to run very smoothly, right? So the institutions work together to make things run smoothly, right? But when there's a breakdown, there's a thing called anomie. And anomie, let me put that down here since many of you haven't heard this, or what is called structural strain, right? When anomie or structural strain takes place, when there's a breakdown in the institutions, people will adapt. So what we're looking at, if you really want to take a look at it this way, what we're seeing in mass is a massive shift in the division of labor. We're seeing a massive shift in the way in which culture thinks about things. We're seeing anomie emerging in the social institutions, right? Take, for example, the economic institution. We've had millions upon millions of people displaced because of COVID. But even before COVID, what we had was looking at the infrastructure, that is the foundation of society. When we take a look at the infrastructure, right, the technology's been changing anyhow. So politically, we've been saying, we outsource too much, foreigners get all of our jobs. Well, that's not true. That's not true. Who took our jobs? Computers, right? Computer technology that started coming around in 1985 all the way through now Computers started to displace human labor. What came after that? Then you had a displacement because of artificial intelligence, because of robotics, right? So a lot of things start to happen where the labor market was changing because the technology changed. And that change in technology mixed with politics, mixed with economic shifts is what really started to displace people. Well, here's what happened. Instead of looking at the structural changes called structural mobility, right? When the structure of society changes, people either get jobs or they lose jobs. They move up in the social class or down in social class. It's because of structural mobility. Now watch this. So now we have this situation in which people are losing jobs all over the place. People are saying, how can I even find a job? Then you have a pandemic where certain people won't even apply because of the health risk in and of itself. The vaccine, I just saw one of the congressmen who has the vaccine caught it. So here you have, this example of someone who got a vaccine and it didn't even work, right? So we don't know what's going on. So we're sitting in a place in which there's normlessness, right? That is what anomie is. Anomie is a sense of normlessness. Take George Floyd. George Floyd is representative of a breakdown in the social system again, right? The protests that followed. The protests that followed police shootings. The protests that followed at the Capitol. The protests in support of Trump. The protests against Trump. All these protests are really about this breakdown in society. Why did Donald Trump get elected in the first place? Why? Because there was a major breakdown in the way in which the societal systems were working. And with that breakdown, he was the perfect person for that particular role. Why? Because we live in a social media generation. We live in a reality TV show, even though a lot of people don't watch TV anymore. But we live in a reality TV show. He was the perfect reality host, right? He can handle, as far as like his mental state, he can handle anything you throw at him. He'll just throw it right back. So given the anomie of the situation, maybe 25 years ago, he wouldn't have had a chance. But given the social breakdown, he became this voice and got elected. However, he also, because underneath the surface, inequality never disappeared. The idea of racial inequality was always there. Gendered inequality has always been there. Economic inequality has always been there. And he gave this voice, and these people followed the voice, right? So they came out of the woodwork. It's not like they had disappeared. They were just laying back, chilling, right? And then all of a sudden, the people in rural areas can't find jobs, right? They're getting decimated, especially if you're in the farmers. And you see all this displacement, so you see these people coming out saying, you know what, this guy's got something to say. Why did he almost, why was the election so close this time? Because those same people have something to say, right? They're displaced. There's a sense of normlessness. Now we're battling politically, right? So when we see them storm the Capitol building, what are we really seeing? We're seeing anomie in society, right? And we're seeing alienation in society. And we're seeing people respond by adapting. In that case, you might call it being a rebel, because anomie says there's 4 types of adaptation, 5. Conforming, right? Innovating, retreating, rebelling, or engaging in ritual behavior, which is essentially where you continue to follow the rules even though the outcome has been long forgotten, right? So the education institution is shifting right before our very eyes thanks to technology and the pandemic. The religious institution is shifting. The family institution is shifting because why? Because millennials aren't as inclined to have children as baby boomers, right? So the baby boomers, that's what the boom was having children. Well, the millennials aren't as interested in having children. So you got a shift in the demography in the way in which people think. And what we have is we have this confluence of economic inequality and forces. We've got political instability built all through the system. I mean, some people are saying we're on the verge of a civil war. I don't know. Possible, maybe not possible. I don't know. And then you have demographic shift. You have technological shift. You have shift in the family. In other words, all the major institutions are shifting. So with all those shifts, here comes GameStop. What? And a group of people were able to innovate within an institutional system, and because human behavior is based upon being social, they use social media, which is the technology, so that they could push up the stock price, right? In the meantime, people are going to get crushed because they don't know how to work within a stock market, right? This is what happened time and time again. They talk about the tulip bubble of the 1500s. where people are investing in freaking tulips and push the price through the moon, and then all of a sudden they realize it's a flower, and it came crashing down. And I'm not laughing that people are going to get demolished. They are, you know. But what I am saying is that this is a repeatable cycle, and it's a trend. Now, why do I find this all important? Oh, symbolic interactionism. Basically, symbolic interaction is a micro thing where we interact with one another and we find meaning through our interaction. It's a negotiated process. You negotiate with me your sense of self. I negotiate back my sense of self. We try to find some kind of common theme where ourselves can converge and we can find stability in our interaction, and bang, all of a sudden we communicate through symbolic interactions. A lot of people are saying that the Gamestop was really a symbolic gesture to show that those who are working class and middle class are tired of being pushed around, are tired of being displaced. So it was a symbolic gesture, a symbolic move, right? Now watch this, right? They shook those markets. So now all of a sudden Robinhood put on restrictions as to how many shares you could buy. Ameritrade, E-Trade, they started putting on restrictions. Well, why? Why'd they put restrictions on? Because the middle class was all of a sudden making more money, and the upper class who were in the hedge funds were getting destroyed, lost billions upon billions of dollars, some of the hedge funds, right? So all of a sudden now, what are we talking about? Are we talking about the fact that everyone should have a democratic access to markets and information, which they do have access to the information, much more so now than in the past. I mean, if people are willing to dig for it, they can find it. All the information is there, but you got to dig. And who wants to spend, like I do, 2 or 3 hours every day? I wake up about 4 or 5 in the morning. I start reading immediately about trends in the market, what stocks I'm interested in. And I have a list of 60 that I follow every single day, waiting for certain price points and certain market actions to take place so I can buy in and then watch it go up. Or sometimes I lose and it goes down, whatever. But most of the time it goes up. And by the way, when I lost the 22%, it's because I invested off of emotion a couple years ago. I wasn't following the market. I wasn't reading every day. Instead, I was listening to what people were saying. Oh, that sounds good. Yeah, all right, I'll go ahead and buy that. I'll put everything in there and it goes down and I'm lost. So I went back to basics and started following the fundamentals, looking at the technical charts, different things like that. What I really started looking at were what are the trends? And I use those trends to make my decisions. That's why, 329% is pretty good in a 12-month period. I hope I do it again, like 3 or 4 more years in a row. I'll have multiple millions of dollars if that happens. So in any case, but it's hard work. It's not like it's simple. But here's what you have, right? Now the capital is getting, Congress is getting involved. The lawmakers are getting involved because somebody within the social system broke through and created normlessness. Now the institution is responding. Right? The political institution is responding, and that's what you see with Congress. They're going to figure out, were laws broken? Were they not broken? How do we define this? How do we define the behavior? Is it, if I had the time, maybe I could have bought a few hundred shares or 1,000 shares or whatever of GameStop if I knew this was going on. Even though it went from 5 to 90, if I thought it was going to 400, what would be putting some money in there and seeing if it triples or whatever, and then getting out, I could have done that, but I don't want to play that game because now it's an emotional game, okay? But Congress is saying, how can Congress say it was illegal for me to follow the trend? It's not. It's called a gap up. If I believe the gap up is going to continue, I go ahead and buy. If I think it's going to retreat and come back down after it gaps up, then I get out, right? It's as simple as that. But they want to investigate. Who are they? Well, the majority of Congress and the Senate are wealthy people, right? Is Donald Trump wealthy? Yeah. Is Biden wealthy? Yeah. How about Obama? Yeah. Right? Were the Bushes wealthy? Thank you. How about the Clintons? Yeah, okay. The Bush again? What? There's wealth there, right? And so you have the wealthy who are in control in this conflict theory, who are in control of the institutions, saying, how do we get it back? Now, trying to find the stability is a functionalist perspective. Trying to get the equilibrium back into the markets is really important because we don't really want a market correction, a crash, right? I think there's some things that are propping it up, but the things propping it up are very artificial, like the stimulus. The idea that there's a stimulus check coming has kept this artificially inflated market up because they know that that $1.9 trillion, part of it is going to come back into the marketplace, and that'll keep it up. But the problem is that the fundamentals are not there. The fundamentals of the nation, the deficit is so much greater than the gross domestic product that we're vulnerable economically. So this idea of stability is artificial. How do you profit off of that? Well, when we take a look at all this stuff, the artificiality is very much the same as it was in 2000. We are sitting on some things that look very similar, eerily similar to that point in time, right? Will there be a crash like there was in 2000? I don't know. I hope not, right? Will there be one like 2008? I don't know. I hope not. But the conditions are lining up that something may happen. And I don't want to be fully invested. I'm diversifying my portfolio very strategically right now so that I'm not going to worry about how much is going to go down if it does, right? But this is not a black swan situation. There are fundamental things that are taking place that have to be watched. Now, here's what we know about anomie and alienation. When a person feels alienated from themselves, right, or alienated from the very nature in which they live, the odds of lethal violence explode, right? When you've worked your whole life and all of a sudden you lose a job and you can't understand why, and you lose your savings and you lose everything, and you've been working and it's all gone. The idea of trying to start all over again is overwhelming. So what we've seen in the last few years is a huge spike in suicide. And it's been in two groups, right? It's been in white males between the ages of 45 and 54, right? I made it. I'm 55. Thank you very much. My birthday was last week. I made it. I'm out of that category. But the explosion was there. And why? Because of the drastic shifts that happened for those particularly white males in that age category, right? You've been earning between $75,000 and $100,000, and all of a sudden, everything corrects. And in 2008, you lose your job, you come back, you find a new job, you were making 90, now you're making 35, you can't pay for anything. And then this stuff happens, and you've worked all your life, you experience anomie. You're not explaining it because AI and computer technology and the globalization of the International Division of Labor has displaced you. You can't, it's hard to look beyond yourself and see that all these forces are at work. But when we see a mass of people who commit suicide within the same category, that is what Emil Durkheim calls a social fact. Suicide is a social fact. You don't need any particular individual to do it for it to happen, which is kind of twisted, right? But in any case, suicide is a social fact, right? There's going to be 34,000 suicides this year. We don't know which person's going to do it, but we know that within this category, there are going to be people that are going to do it. The other category is 14 to 17-year-old teenagers. Why? Because of the impact. This is your development time, and this group is being alienated as well. Or not alienated, they're experiencing anomie. And they're experiencing anomie through social media, where the social media and the bullying is destroying people, young people, through nastiness, right? Cyberbullying is a terrible thing. So this group of people has also seen a spike in suicide. Why? It's the confluence. It's a confluence between economics, politics, history, technological shift, demographic shift. So if we understand, demography, by the way, is just another way of saying the makeup of the population. Because the makeup of the population is changing, right? Because the economic system is changing, because the political system is changing, et cetera, right? In ways that we couldn't anticipate or understand, even the workforce. It's creating displacement, right? Normlessness, a sense of hopelessness. Those are the forces that are pushing people to protest. Those are the forces that are pushing people to kill themselves or to harm others, right? There's also been this explosion in mental health issues, right? It's all the same. So the rise in Gamestop is no different than everything else, right? The institutional forces create the context in which people behave and make their decisions, and it pushes behavior in particular directions. This is what you're witnessing. Now, I am concerned because without critical thinking to identify how the institutions are shifting, it's very hard to place yourself into that stream. And if you can't place yourself into that stream, the stream will push you where the stream is going to go, right? And my goal for my students, and you can't tell, I hate this remote learning stuff. I love being in class because the interaction. I know my professor dropped. Why did it drop? One, there's a misunderstanding. Some of the things that they said were absolutely incorrect. I never changed the time in which my live streams happen, but everyone said that I did. No, I didn't. When our class met at 1 o'clock, the live stream started at 1. Now I just do it totally asynchronous. I just put a video up whenever, and you watch it through Blackboard announcement board or what have you. But that's not what happened, right? So when we take a look at these things, I'm a much better live teacher. I mean, I've been doing it for 32 years. I'm very interactive. So if you take a look at pre-pandemic, post-pandemic, pre-pandemic, I was 5.0. Post-pandemic, people are like, this is horrible, and it is for all of us, right? I like that interaction. That's where I thrive. And I suffered from it. I experienced anomie and alienation from this. And I had to do some behaviors. I had to go inside and critically assess what's taking place. I made significant modifications both in my life and my lifestyle, so that I could adapt. And I made some significant changes. And one of the changes I'm going to make, I took a little part-time job, and at the part-time job, everyone watches my portfolio, because we talk about stocks and stuff, and they're watching my portfolio explode, and they're like, how are you getting these returns? And I'm like, talking them through, and they said, well, why didn't anyone know anything about this? So what I'm going to do is I'm going to start making videos on how to invest. And unlike these other persons that give you, and their analysis is really good typically, they pick a stock and they give you an analysis, and then you go buy it, whatever. Well, if you don't know how to assess that stock, right, within the rubric that we just discussed, you're going to lose, right? If you don't have a strategy, you will ultimately lose, because those persons are professionals and we are not. Okay, so what I'm going to do is I'm going to start a channel teaching how to do all of this, so that people getting a 300% return or 240% return or even 100%, it's really hard to do. When I worked at Merrill Lynch, we were regarded as superstars if we could get our clients an 8% return a year. 8%, okay? So when I talk about, I'm up 29% this year, at Merrill Lynch, we strove for 8, all right? The reason I'm at 29% is because I'm a very, very hyper-aggressive investor, because I'm very well informed about the stocks I pick and the market conditions and market forces. Most people are not, so they're guessing, they're gambling. Well, I'll buy Carnival. I see those ships out there and it's down. Well, that's fine, but what's the profitability? What's the earnings per share? What's the price to sales ratio? All these other, what's the margins look like? Right? If you're not looking at that, what are the trends look like? What are the, is it a teacup or, a cup and handle? What are we looking at? Oh, I don't know any of that. Well, then you're guessing. And what I'm going to do is I'm going to take people to a point where they can not guess anymore, but they actually make informed decisions. And it's not just about investing. It's really about how to make informed decisions about our own life, right? It's about our career. It's about what is our life going to look like 25, 30 years from now. It's going to be dramatically different. But how's it going to be different? Can we invest in that? Can we make adaptations? Can we develop a strategy? Understanding, once again, history, economics, politics, education institution, the family institution, the media institution, and the role of technology and demography on outcomes. If you learn how to identify those things, you can talk about crime, you can talk about, soccer, you can talk about the two Escobars, you can talk about lethal violence, or sports, it doesn't matter. It's all the same, right? So in any case, I hope that this recorded all the way through. It seems like I had a pretty good run without any disconnections from my Wi-Fi, which is a first. But in any case, I hope this was helpful. It's a way of understanding social environment, human behavior, and in this case, Gamestop, but also suicide, and the value of critical assessment. I wish you well. I'll talk to you again soon.